Hello, and welcome to another session of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Thursday. So we will be looking at what happened last night and what we are expecting to be happening in the markets today. So first things first, let's look at the economic calendar. So as you can see, on Wednesday, we had some news happening. One of them was the wage price index, which came in slower than expected in Australia. We had interest rates data coming from New Zealand, a 50 basis point hike to 4.75%, followed by an RBNZ press conference. Then later on in the day, we had the FOMC meeting minutes, the most anticipated news for the day. And also we had the RBNZ Governor Adrian All issue a speech. So from the FOMC meeting minutes, there was a key number of takeaways. So one of the takeaways that a lot of investors were focused on is that almost all participants agreed that it was appropriate to raise the target range for the federal funds rate by 25 basis points at this meeting. And this was the meeting that they had on the first week of February. So that's one thing. Nobody was opposed to a rate hike. So they were in favor in order to keep rates higher for longer. Then the other key takeaway from the meeting minutes was that a few participants stated that they favored raising the target range for federal funds rate by 50 basis points at this meeting. So while a lot of them agreed for 25, some of them were already in favor for a 50 basis points at that meeting. So with this in mind, when you look at the current economic data that we have seen over the last couple of weeks, which is indicative of a very tight labor market, and at the same time, we have seen retail sales emerge strong, then there's a very strong case that the Fed might consider 50 basis points on the next meeting. So at the same time, we also saw services and manufacturing data remaining quite resilient, basically indicating a very healthy US economy, which would basically keep pushing inflation higher. So last takeaway is that all participants continue to anticipate that ongoing increases in the target range for the federal funds rate would be appropriate, which means that they're in support for another rate hike next meeting, which is in March, around 22nd. So when the Fed meets on the next meeting, we already have an expectation that they're going to do a rate hike. So the question is whether they'll go for 25 basis points or for 50 basis points. So from the inflation data that we saw for January, it's indicative that inflation is spiking again, and they might consider going for 50 basis points. So as a result of this information, now if you go to the charts and look at what happened, first, you consider the US dollar index. You can see that once the Fed meeting minutes were released, the immediate reaction in the market was the dollar strengthening. So with the dollar index strengthening here, it was indicative that the market is pricing in a stronger rate hike. So towards midnight, we saw the dollar index make a pullback, and now it's making a recovery. So remember, today is a public holiday in Japan, so less trading activity in Japan. So we didn't have a lot of volatility in that country. So we will be expecting volatility for Japanese pairs to resume tomorrow. So that being mentioned, now when you look at the US dollar pairs, we begin with New Zealand USD. You notice that the dollar was strengthening before the New Zealand session started here, and it made some recovery. For euro, you can see the euro was losing to the dollar, and this could continue for the rest of the day. The pound was also losing to the dollar as the dollar was strengthening. So dollar rallying against the Canadian dollar before raising gains. And also for the yen, you can see that the USD attempted to push higher before pulling back down. So as mentioned, there is currently a public holiday in Japan. So if the market was to break here, then there would be more trading volume from Americans compared to the Asians. And in this case, we could have a very nice rally towards the upper side. So it's a key level that has been tested several times. The market has not broken here. So after all this consolidation, there is a good chance we might be seeing some good breakout representing a good buy opportunity. So it's one of the pairs to watch for the day. So as for gold, you can see it was largely losing to the dollar, especially after the FOMC meeting minutes last night. So managed to make a recovery, but now it seems like we will be having a continuation. And this is based on data from the last 1 hour and the current hour. So as for indices, they were largely dropping before making a recovery this morning. That's the US 500. If you look at the Dow Jones, largely losing. So this is a big sell-off that started about 2 weeks ago. So we have seen this theme continue across board. And at the same time, if you look at the US Tech 100 or the NASDAQ, big sell-off and then immediate recovery. So maybe during the London session, we'll be seeing some further downside. So as for Brent oil, managed to drop further back downwards. So you can see that we had a bullish setup here. Second one didn't play out. Third one played out for a while before breaking lower. And now it has broken all the major support levels that we are watching. And now the thesis stands towards the bearish case. So there is a good chance we'll be seeing the market now testing the most recent support. So this particular support area here might be an area of target, especially considering the big sell-off that is happening here. So some further downside could be targeting this area, and this is around $79.5 per barrel. So that's it for today. So key highlight is that the FOMC meeting minutes were very hawkish, and this is indicative of a much bigger rate hike expected on the next meeting. And this is indicative of a strong dollar and weaker equities. So as for today and the news that we're expecting for the rest of the day, one, we'll be looking at the European final CPI. So this is the broad measure of the overall inflation within the Eurozone. So in the previous reading, it was 8.5%. We expect inflation now to start spiking again and jump to 8.6%. So if inflation moves higher, then we'll be expecting that the ECB will go for a stronger rate hike. So in that case, it could be a very positive signal to buy the euro. So on the other hand, if we see a much slower inflation, then you know that the ECB will be much slower and that would be much weaker for the euro. So this is the main focus for the day. It is happening at 1 p.m. So later on, we'll be looking at the preliminary GDP quarter over quarter in the US at 4:30 p.m., as well as the unemployment claims. So unemployment claims is a big indicator of the tight labor market. So it was mentioned a couple of times in the Fed meeting minutes. So it might be worth considering. So remember, this is the number of individuals who filed for unemployment insurance for the first time during the past 1 week. So in the previous week, it was 194,000 people. So we're expecting that last week, it was around 200K. So the outcome will be compared with the 200K number. So preliminary GDP was previously up 2.9% in the last quarter. So we are expecting this to remain the same. But if it improves, then in this case, it would allow the Fed to get more aggressive. So remember, when the Fed is making decisions, it will consider a concoction of several data points coming from different sectors of the economy. This includes the retail sales, the jobs data, the CPI data, the PCE price index data, GDP data, and so on. So this might be one of the most important data points that the Fed will be looking at, GDP. So if there's a strong economic growth, then in that case, they might have more room to make a stronger rate hike. So as we approach the end of the week, we will be having the crude oil inventories at 7 p.m. Then on Friday tomorrow, we'll be having a speech from the new Bank of Japan Governor Ueda. So once we go through the speech, we are expecting that he's going to give some hints about monetary policy. So the market is tired with the current status quo, where the Bank of Japan keeps on buying more bonds, doing more QE, and at the same time retaining rates at negative 0.1%. So we are expecting some change to start happening with the new governor. And if this happens, then this could cause some volatility in Japanese yen pairs. So lastly, we'll be looking at the core PCE price index, basically a broad measure of how fast the prices are changing, that is consumer prices in the US. And this is a data point that also the Fed will be looking at in order to make a decision over the next 1 month or over the next meeting. So personal income month over month and personal spending will be good measures over how strong the US consumer is. You want to know personal income levels as well as personal spending. Then new home sales is an indicator of the real estate market conditions. This will be at 6 p.m. Then revised UOM inflation expectations will also be very important. So towards the end of the week, two speeches, one from FOMC member Jefferson and another one from MPC member Tenreo. So once we go through this, then we'll have an idea of how the Fed might react on the next meeting. So as for today, key focus in summary is the European final CPI at 1 p.m. and preliminary GDP quarter over quarter, combined with the unemployment claims at 4:30 p.m. affecting the US dollar. So that's it for today. Thank you very much, guys, and I hope to see you on the next meeting. So a good question here. Thank you for the spotlight. Up to what points will the interest hikes be sustainable? So the interest rate hikes are not sustainable at the current level. So majorly, whenever there is a rate hike, it takes between 9 months and 12 months to have a full effect on the economy. So some of the rate hikes that were done in March last year are currently beginning to take full effect in February through to March this year. So the rate hikes that are happening today will be having a full effect a couple of months down the line. So since the Fed is making decisions based on lagging indicators, then they have to make decisions that will be affecting the economy at a future date. So as a result of that, there's some tension of whether the current rates are sustainable or not. So we will be seeing more happening based on these. And now that we are looking at a potential higher rate hike, this could drive the US economy into a recession, but this may not happen right now. May take full effect once it starts affecting mortgages. People are unable to, let's say, honor their mortgages or honor their credit card debt at a future date, but not right now. So yes, we don't know yet what is the optimum sustainable level, but at the same time, we know that if these rates keep going up at the current rate, then breaching the sustainable level is a much higher probability. So the markets look very boring. The market appears to not to commit to any trends, which we're showing, and the FOMC did not bring the expected volatility. So this is something that has been happening. So a lot of investors have been adjusting their expectations for the year. So in January, a lot of optimism drove equity indices higher. But then if you look at what happened in February, it was the exact opposite. If you look at currencies, they were all gaining against the dollar or the major currencies in January. Then in February, the exact reverse happens, the dollar strengthens, and now the dollar is performing better than all these other currencies. So with that in mind, then you know that the market has been pricing in this information that we got from the Fed. So basically, if you look at the Dow Jones index, it has dropped down for 3 consecutive weeks. And this being the 4th week, you can see that people are beginning to price in the potential that rates will continue going higher for longer. So President Biden, I cannot provide a comment today. So thank you very much, guys. Hope to see you on the next one. Hey, Tony.